Hey guys, welcome back. In this episode, I'm going to be talking about Peloton, ticker symbol PTON, and why I plan on building a position here. Now, Peloton was one of the prime beneficiaries of the COVID-19 pandemic, as when people were locked at home, they wanted to find a way to work out. Peloton saw amazing demand for the products, which skyrocketed their stock from March low of $20 all the way to an all-time high of around $160. Even after this amazing run, I still think Peloton's growth story is still very strong and intact, and I still think they have a lot more room to run. So with that, let's dive right into what Peloton is all about. Okay, so let's first talk about what Peloton is. Now, I'm sure many of us already know what Peloton is, but Peloton is an American exercise equipment and media company founded in 2012, originally launched from a Kickstarter campaign in 2013. Now, Peloton is known for their bikes. However, they're releasing a treadmill, as well as that they have an app with guided classes. Additionally, they sell accessories and apparel. So the original Peloton bike starts at $2,245, but it's now discounted, sitting at $1,895. You can also get a finance for $50 a month. Now, they're actually offering a 30-day home trial to be able to get the product in people's hands, which they believe they can convert them to becoming a paying customer over time. They also offer these classes for free, so all you have to do is use their app, download it on your phone, and you can get started. Now, Peloton is a uniquely vertically integrated business where they own the whole entire tech stack from hardware, software, and media. They also have 103 retail stores, as well as a growing operation of logistics. Now, Peloton is seeing amazing revenue growth at 100% for 6 years running. This is very impressive, and it clearly shows that there's a lot of demand for Peloton bikes. We can see how this workout growth continues to outpace subscription growth, as their connected fitness subscriptions are up 107% from 2018 all the way to 2020. However, their total workouts are up 213% from the beginning of 2018 to the beginning of 2021. Now, Peloton is known for a very strong cult following, as many of the users love their product. We can see through their NPS score with 94 out of 100 of their satisfaction rating, which is one of the best in this whole entire industry. Now, what Peloton is trying to do is disrupt the fitness industry. We can see other tech disruptors in their respective industry, and Peloton standing alone in this fitness environment. Peloton currently has about 1 million subscribers, and their audacious goal is to reach 100 million subscribers. Now, their strategy is core US growth, product innovation, geographic expansion, greater affordability, digital expansion, and creating the best place to work in the world. So in summary, they have massive global opportunity, powerful unit economics, deep moats, a world-class team, super engaged community, a strong balance sheet, and a tight focused plan. So we know the Peloton bike is their flagship product. However, they're releasing a treadmill later this year. Now, their products are very high quality and have some of the best tech in them. Now, one of the key things for Peloton is their content that they provide. They have thousands of classes in their library where their members are able to engage in new live content and retake their favorite on demand. They're continuously investing in programming content to be able to maximize their engagement, and they continue to add more. And by listening to the community and members, they've been putting out newer content such as dance cardio, driving 18 times growth in their cardio discipline, with over 900,000 dance cardio classes already completed since March. Not only that, but they're extending their lead in music, as over 5 million classes have been taken from their artist series. Now, they're getting very high return for all this content investment. We can see their average monthly workouts per subscription has gone drastically up in the past few quarters. The great thing to see about Peloton is that they're trying to differentiate into different products, which is helping them be less reliant on just their cycling business. We can see for the full year of 2020, cycling was only about 64%, down from 72% the year prior. Strength is up next with 13%, with floor 10%, meditation yoga 6%, and running at 5%. We can dig a little deeper by looking at their total workouts, as cycling is 36%, strength 22%, floor 11%, and the list goes on. Now, I use the term cult following because this community is very strong, and we can clearly see that through their social channels. They have unique awards such as high fives and tags, but they also have a very strong presence of Facebook group members and instructor IG followers. Now, they're significantly ramping investments to increase scale, automation efficiency, and their advantage. Now, they're building out many different factories to be able to meet this demand, as well as invest in quality labs. We can see that their new Shin-Ji factory, which opened late last year, has the ability to do 1.5 million units per year, and they've been investing heavily in their quality and innovation, with 3 new Peloton-owned quality labs, built from 2019 to 2021. Now let's talk about their market opportunity. Now, their total addressable market continues to expand. Now, they believe that their SAM, or their serviceable available market, is 20 million, representing 43% growth over 14 million in 2019. Now, since they have very high engagement, they have a very low churn at under 1%. We can see in Q4 of 2020, this number was only 0.5%, which is very impressive. Their connected fitness subscription growth remains their number one priority, as they're prioritizing subscription growth over profitability and margin dollars over margin percent. So on February 4th, 2021, Peloton released their second quarter fiscal year 2021 highlights. Now, their connected fitness subscriptions grew 134% to approximately 1.67 million, and paid digital subscriptions grew 472% to approximately 625,000. Their whole entire total members grew to over 4.4 million. So this company is still growing at a triple-digit clip, so it's growing very rapidly. Their Q2 total revenue grew 128% to $1.06 billion. So clearly the demand is there for their products. Their subscription workouts grew 303% to over 89 million. And their net income was 63.6 million, representing 18 cents per diluted share. Now for the next quarter, they're guiding around 2 million connected fitness subscriptions and $1.1 billion in total revenue. So still an increase from the previous quarter. They also revised their full year fiscal 2021 guidance higher to 2.275 million fitness subscriptions and a little over $4 billion in total revenue, along with 300 million or more in adjusted EBITDA. So it's really hard to argue against their growth rates. They're seeing such high demand in their subscriptions, as well as, which translates to really high growth in their revenue as well. Peloton is already a profitable company, so that's really good to see. So everything in this quarter looks really good. Now, although the quarterly sales topped $1 billion, their shares fell about 6 to 8% as the cycle maker steps up as they had some supply chain problems. They warned that near-term investments in their supply chain to speed up deliveries is going to weigh on their margins. And they also expect slow and steady progress for the remainder of the fiscal year. Now, as an investor, you want to see that the demand for the product is there. And with Peloton, with very impressive growth rates, over 100%, and them saying that they're going to invest heavily to ramp up their production to be able to meet the demand, I think this would be a perfect buying opportunity, since we know the demand is going to be there for a long time. So let's quickly talk about their valuation. Now, Peloton is trading with a market cap around $43 billion. When Peloton went to the public market in 2019, it was trading around $25. Now, from the March lows in 2020, around $20, it's up drastically. And shareholders have done very well for themselves. But is there more room to run? Well, Peloton is currently trading at a price to sales of 15, with a trailing PE of around 200. So we can clearly see that this company is trading at a pretty high premium. Now, Peloton is pushing quite a bit of revenue, around $3 billion. And their quarterly growth rates are very healthy at 130%. So I believe given the way the market currently is right now, I think Peloton still has a lot more room to run. Peloton's problem is that they're lacking the supply to meet the demand. Once Peloton is able to start ramping up, delivering their products, I believe a new wave of people will line up to buy again. Now, currently the wait time is around 2 to 3 months for a bike, yet people are still lining up and signing up for it. I think there's people who are looking at this and waiting for this time to drastically decrease. And once that availability is there, I believe there's going to be still tons of demand for their products, which will drastically help them in the years to come. So what's my take on Peloton? Well, I believe people do want to work out at home. And COVID has shown us that there's plenty of benefits to do so. Not only do you have a lot more privacy, but it's much more convenient. Not only do you have tremendous privacy, but it's also much more convenient than having to drive to the gym and do your workout. Now, I believe the bear case is that some people believe this is just a trend due to COVID, and they've seen this rapid demand just because everyone's locked at home. However, I don't believe so, and neither does their CEO. They believe this is the future of fitness. Now, some of the problems about working out at home is one, the equipment. You're going to have to pay up for all the equipment yourself. And two, it's not fun, or you're not in a good environment to be able to have a good workout. Now, Peloton is trying to be the solution to that problem. Now, they're gamifying the whole entire idea of working out by making it not only fun, but also really rewarding. Now, I believe health is wealth, and people are going to be willing to pay up for their health. Now, these bikes are definitely not cheap. However, their target audience is not only health conscious, but tends to be fairly successful in their working life, so they have the disposable income to be able to pay for it. We've seen that the product is in demand, and you can see that not only through their subscription rates and their growth rates, but also through their social media channels. Now, I frequent Reddit quite a bit, and looking at Peloton Cycle's subreddit, we can see the tremendous growth that it's had in 2020 and even into 2021. There's such a tight-knit community and a love for their product that once they have someone in their ecosystem, that person will be a die-hard fan and would spread the word to all their friends and family. This is very similar to the Apple ecosystem, that once you're in it and once you are a fan of it, you wouldn't even think about leaving it. Now, we know Peloton bikes and their equipment are pretty expensive. However, the quality is there to back it up. Not only is the bike high quality, but the screen and workout classes are also top notch. This has created a workout experience that's unmatched in this whole entire market. And as more and more people look to create a gym for themselves at home, Peloton is going to be the number one player when they look for this kind of equipment. When I think of Peloton, I think of Apple because of the high quality products, services, and community behind it. And that's why I think Peloton, even to this day at their valuation, still has a lot more room to run. So with that, guys, that was my breakdown of Peloton. Let me know in the comment section down below what you guys think about this company, as well as what you plan on doing with this stock. I believe with this pullback around 20 to 30% from their all-time high, I think it could be a really good buying opportunity to buy into this company. Now, Peloton showed some weakness after their earnings report, as they said that they had to invest heavily into their production, which could cut into their gross margin. Despite this, I actually think that's a really good thing for Peloton, as it shows that the demand for the products are very strong, and I believe this will continue in the years to come. Now with Peloton stock, I don't plan on trading it, I just plan on buying it and holding it for the next 3 to 5 years. Peloton has done such an amazing job of creating a very strong brand and a community for the products. The products are very high quality and it's very sticky business as the customers continue to spend a lot more in their business. Now, I believe Peloton and Apple are very similar, as one, they have a very strong brand and community, 2, they deliver high quality products, and 3, they have a very strong ecosystem which is very sticky, which keeps customers coming back to their business. I believe with a combination of this, along with their very strong financials and good management team, that Peloton could be a multi-bagger for the years to come. So with that, guys, thanks as always for all the support. I reached 1,000 subscribers just this week, and it's pretty surreal to me that I just started this channel only about a couple months ago. I've been really enjoying creating episodes for you guys and connecting with you guys in the comment section down below, so I plan on continuously investing back into the channel. So guys, I'll see you in the next episode, and let's go get that bag.